as we watch the tape continue to nosedive, remember there are a lot of software companies that can potentially hold up just fine, even do well in the event of a coronavirus-induced economic slowdown. But their stocks are getting hammered anyway, which is where opportunity comes in. Consider the Trade Desk, which helps its clients manage data-driven digital advertising campaigns. This thing's been a fabulous long-term winner. We have loved it because the company's also becoming a cord-cutting play. If you want to advertise against streaming content, it's Trade Desk. They help you figure out the best way to spend that money. At the end of last year, the stock was trading at $267. But last Thursday, it has surged to $323. But thanks to this market-wide sell-off, TTD has given up all those gains and then some. It closed at $250 today. Tonight, though, Trade Desk reported, I think this may be the moment of truth. While the company blew away the sales and earnings estimates, they also gave conservative guidance for both the next quarter and the full year. Why? Because they're making aggressive investments to expand into high-growth areas like connected TV, data-driven advertising, and the rest of the world. A year ago, Wall Street would have loved this kind of quarter because investors wanted growth at any cost. But now they've become a little more skittish. I think that is so wrong. A company must invest for the long term to win. Let's check in with Jeff Green. He's the founder, chairman, and CEO of the Trade Desk, and one of our favorites to find out more about his quarter and the company's prospects. Jeff, welcome back to Mad Money.
Thank you so much. I'm glad to be back.
Jeff, I tell you, people just say, well, the world stopped, nobody's doing business. But one thing I see are endless advertisements on my PC and when I stream for presidential candidates. How do they know they're advertising? I bet you they give the money to you.
Yeah, we're having an amazing start to our 2020. And you'll note from today's guide that we're just feeling really great about our Q1. We're feeling really great about the year, of course, as well, and that's largely driven by political advertising. So I'm really excited, even though it's low single digits in terms of percentage of our customers. It is an amazing addition to the year for us, and really excited to be representing nearly every presidential candidate on both sides of the aisle, as well as all sorts of local candidates as well. So we're excited to be participating in what we think is a very important process, and excited for the just yet additional tailwind that it represents.
Okay, well, I don't know whether there's advertising candidate privilege, but why the heck? I see a Mayor Bloomberg ad no matter where I go. I don't know. I mean, is that Trade Desk?
We're definitely representing nearly every presidential candidate, so it could be.
All right, fair enough. I appreciate you have to be discreet, but boy, I can't get away from the guy. And now, let me ask you something. We have been saying, if you want to play cord cut, you know we've been saying this, at Roku's overdone. The fact is that the companies I deal with, and I know from advertising, they're great companies, but they don't know how to do it. And they don't want to be captive to two different companies that really are evil empires. They're going to Trade Desk, correct?
That's exactly right. So, you know, Google has nearly 75% market share in search. Facebook has something close to that in social market share. But in connected TV, it's much more fragmented. And what many advertisers have discovered recently is that the rest of the internet is very big. And that is especially brought on by connected TV. So because connected TV is so fragmented, there is this huge opportunity for advertisers to come to us. So if you want to advertise on Google, you go to Google. If you want to advertise on Facebook, you go to Facebook. If you want to advertise on the rest of the internet, you come to us, and that's where we're providing the most amount of value.
Well, one of our themes tonight, as everyone, we'd been very bearish, and I think when my wife watched the show, said, "Jim, you're hysterical about this illness." Well, now everyone's talking about the illness, so I'm not as hysterical. I'm trying to find opportunity that the market's down. Does the Trade Desk have anything whatsoever to do with the coronavirus?
Well, so, you know, in order to win in our space, you have to be a global player. So we have, 25 plus offices around the world. As you know, we've talked about before, that we have offices in China and in Hong Kong. So, those offices are definitely impacted. And of course, most businesses around the world have some amount of impact from it. But as far as what we're seeing on sort of from the global perspective, people are continuing to advertise as aggressively as they ever have. And we don't see any major effect to our business at this point. I'll also say anecdotally that just watching closely how the governments have responded in China and Singapore as well as here, I'm really impressed with the way everybody's responded. And I think that signals, at least for me, that things will be under control, perhaps faster than in scares of the past like SARS.
Certainly good to hear someone be optimistic. One last question, Jeff. One of the reasons why I've been so bullish on Trade Desk here, people working at home. And when you work at home, you have distractions. And one of the things you do is you cord cut, you watch. And if you watch, you're going to see more of Trade Desk during the day than when you're at work. What do you think of that analysis?
I think that's right. I do think that the more times people spend at home, the more likely they are to watch television, the more likely they are to cord cut. The less time you spend traveling, the more time you're going to spend consuming media. I think that is absolutely a fact. I also think that if there is any negative impact, even if it's small, to consumer sentiment, that makes it so that advertisers are going to be way more deliberate about where they spend,
right.
And that's going to be very good for us. So in all scenarios, data-driven advertising, I think, is in a very good position.
Well, you know what? I'm so glad you came on. You are a straight shooter. What a business you have. Congratulations. That is Jeff Green, founder, chairman, CEO of Trade Desk. Thank you so much for coming on Mad Money, sir.
Thanks, Jim. It's so great to be back. Thank you.
You're terrific. Okay, remember what our focus is. Highest growth matters, even in a terrible market, because it won't always be terrible. Trade Desk. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.